this as well. So if for some reason you cannot stay till the end or are worried about this session being recorded, do not worry. It is. The recording will be sent out to you guys tomorrow as always. So keep an eye out for it tomorrow if you are looking for the replay. But we're here tonight to talk about trading the 5-minute bar with the Ichimoku cloud. We're actually going to talk about a little bit more than just trading the 5-minute bar with the Ichimoku cloud. But we're going to be talking about using the cloud in a kind of very applied way just for day trading using weekly options. We're going to go through a very simple trading plan that we use and that is very easy to apply to any type of day trade setup using the Ichimoku cloud. So let's go right ahead and jump on in here, and I'll start with our standard boilerplate risk disclaimer. Day trading, short-term trading, options trading, and future trading are extremely risky undertakings. They generally are not appropriate for someone with limited capital, little or no trading experience, and or a low tolerance for risk. Never execute a trade unless you can afford to and are prepared to lose your entire investment. All trading operations involve serious risks and you can lose your entire investment. No trades are recommendations or advice, and we cannot be sued for losses of capital. All trades are for educational purposes only. Please contact your broker or registered investment advisor for execution margin and all other capital requirement questions. Everyone watching this presentation adheres to all disclaimers on optionhacker.com and alphashark.com. So with that, let's jump right into the presentation here. So Andrew likes to create this analogy between learning how to trade and accomplishments that other very successful people have done in their field. And the reason that people are successful is because they take time to learn more about what it is that they are trying to succeed in. And you guys are all doing that right now by showing up to this presentation. But we're here to talk about the Ichimoku cloud. And the Ichimoku cloud actually started with Rice, as did all candlestick charting methods. If you guys don't know, this is really quick bit of background and history on candlestick charting. It started with rice traders in Japan. They wanted to develop a better way to track price action in the daily movement of the rice market. They were all there trading rice, and they developed candlesticks and then further these more complicated technical studies like the Ichimoku cloud. And these traders were incredibly successful. The guy that actually invented the Ichimoku cloud went on to have a very long career, successful consulting career as a trader and technician after inventing the Ichimoku cloud. The study is rather old, but it is still something that isn't quite utilized by as many traders as you might think. It is something that up until just recently, some major retail brokers didn't even have on their charting platform. Does anybody here know for a fact that their platform that they are using to trade on a daily basis does not have the Ichimoku cloud? Doesn't anybody know that for a fact? It is a study that's available on pretty much every major discount brokerage platform out there. Thinkorswim has it, TradeStation has it, Interactive Brokers has it, and Options House / Trade Monster have it as well. They actually didn't have it until we started to give presentations about it to their audience, and they decided to build it into their platform. But if you don't have access to the Ichimoku cloud in your trading platform, I'm going to show you guys a fantastic resource that you can use to get the Ichimoku cloud to kind of take a look at this stuff if you're still trading on a platform that does not have it as part of the standard charting or analysis package that comes into the platform. So this is tradingview.com, and you guys can all write this website down. It's completely free. We have no relationship with them whatsoever, so I don't get any kind of kickbacks or anything like that for showing you their site. But they have the Ichimoku cloud built into this thing for free, and if you go into this, you can add it to your charts, and they have intraday data as well. So if I wanted to watch Google trading in real time on the cloud, during the day tomorrow when the market opens, I can go ahead and do that. And they have this for currency pairs, for equities, futures, and pretty much every security that you can think of. So that's a fantastic resource. If you guys are not familiar with the cloud or don't have somewhere where you can kind of look at the cloud and follow along, either during this presentation or when you're watching the replay, tradingview.com is a fantastic resource. So the Ichimoku cloud is a technical analysis method that uses the past, present, and future to help traders identify at a single glance if a security is in bullish or bearish territory. Yes, TradingView is 100% free. They do have some kind of premium service. I want to say it's like $20 for the whole year or something like that. But the cloud and the real-time intraday charts that come with the basic free setup on TradingView, you get all of that without having to pay any kind of subscription. I believe you have to create an account, create a username, but no, there is no cost associated with that. So if you want to kind of look at the cloud and look at charts with the cloud on them while you watch this presentation or while you're watching the replay, that is a fantastic place to go and get that information, TJ. So the Ichimoku cloud is one of the only technical indicators that I know of that looks at the past, present, and future to help traders identify what the overall trend is in a given security and where potential breakout points might be. Now, if you're not familiar with the Ichimoku cloud, that might not make a whole lot of sense, but as we get into the rest of the presentation here, you'll see a couple of examples of how the cloud is used and exactly what I mean when I say we are looking at the present, past, and future to get an idea of what trend is telling us. But the Ichimoku cloud, and the full name for the Ichimoku cloud is actually Ichimoku Kinko Hyo, actually translates to one glance equilibrium chart. And that's exactly what it's designed to do, is give you a read on trend with one single glance. So it's meant to be an indicator that you can use very, very quickly and very efficiently when you're trying to evaluate setups. Now, I wouldn't consider myself the most technical trader out there, and I don't know, the best applications for something like Elliott Wave or fib retracements, but I do know that to do an analysis with those types of tools, it can be a little bit of a lengthy process. But with the Ichimoku cloud, it really is just simple as pulling up a stock with the cloud on it, looking at it, and seeing where we're trading relative to the cloud. So here in Google, we can see that we're trading inside the cloud right now. That quickly, I am able to make an analysis and say, hey, we're actually trading in neutral territory now in Google. It really is that quick, and that's what it's designed to do. And it's made up of 6 key components, each of which we're going to look at individually, but this is what makes this such a good indicator for traders who don't really consider themselves master technicians, because it has these 6 different components, meaning that there's a really easy way to go through and kind of create a checklist of bullish or bearish indicators based on these 6 components. It also makes it really easy to confirm setups because there's so many different things that I'm able to check against each other to confirm the strength of a setup that I see on the Ichimoku cloud. So we're going to look at what the Ichimoku cloud is, the different components of the cloud, using the cloud as levels of support and resistance, how to use the cloud to determine what overall trend is, and using the cloud for options. We're going to go through a step-by-step, really easy to follow day trading plan for weekly options. I'm going to show you guys how you can use the Ichimoku cloud to flag signals to day trade weekly options, calls and puts, using the Ichimoku cloud. So here we have Google on the daily bar, and this chart is a little bit old, but I picked an older example here. It's about a week old, so we can see the levels a little bit more clearly here. With the choppiness last week, they got a little smushed, and I want to have some defined areas to show you guys here. But here we have the Ichimoku cloud. Now, I know that for most of you that have been around or part of the Alpha Shark trading community for a while, you probably all have seen this before. But just curiously, how many of you in here have never even seen the Ichimoku cloud before and are looking at something completely new and foreign to you right now? How many of you have never seen this study before, have no idea what this is, zero clue what all these different lines are, what's going on here with all the shaded areas that we have here, or have no idea whatsoever how to read this? How many of you? Just curiously. And it's okay. No one else can see your responses if you are worried about that. That's not the case. So actually, yeah, there's a decent number of you, and that's great. That's really good to see, because we want to teach as many people about this as possible. But this is the study. Someone saying, I've seen it in Trade Monster. Yeah, Trade Monster has it only just recently, though. They've only gotten it within the last 2 years or so. But this is Google on the daily bar, and the 6 components that made up that chart that you guys just saw are the Tenkan-san line, the Kijun-san line, the Senku-span A line, the Senku-span B line, the Kumo, the Chiku-span line, and all 6 of these tell me something different and are calculated differently to create that study that we have laid over Google on the daily bar. Now, we're going to go over these one by one. We're going to go over these with all of the names, and I'm going to show you how to calculate them. But after that, as long as you remember what the line is, you don't need to remember how to calculate it, and you don't even really need to remember what it's called or what the name of it is. As long as you understand what it's telling you and exactly what time period that line is showing you, you really don't need to know any much more than that. So let's jump right on in here and start with the first component of the cloud, which is the Tenkan-san line. Now, this is a short-term trend line And this short-term trend line is one of the fastest moving averages on the Ichimoku cloud, and it's similar to a 10-period moving average. Like I said, very short term. But it's taking the highest high and lowest low and dividing that by 2 over the last 9 periods and plotting it on the current time period. So basically what it's looking at is the last 9 bars worth of price action and creating this range, dividing that by 2 and plotting it on the current bar. Now what this is showing me is 9 periods worth of price action. So if I'm looking at the daily bar, it's using 9 days worth of price action. If I'm looking at the 5-minute bar, it's 9 5-minute periods worth of price action. And if I'm looking at the 15-minute bar, it's 9 15-minute periods of price action. Okay, so it's a very short-term moving average, and what it shows us is kind of the first level of support or resistance on the Ichimoku cloud. So when we're looking at Google trading here, if we see Google above the Ichimoku cloud here, this level, this green line, and anytime that we're above it, serves as support. So sometimes what traders that are trading with the Ichimoku cloud will do is when they're looking for a breakout like we saw right here, they'll get long at this level and then trail a stop at this first period of support, okay? With the idea that if that level of support is broken, we could see some significant downside. So it's an important level because it's the first level of support or resistance. And it can also give me a clue to when trend might be ready to turn south. So what we see here as the 9-period moving average breaks below the longer term moving average, we start to get into a little bit of a choppy range, right? So I can use these two moving averages. We're going to look at the next one on the next slide, kind of in the same way that I would use any shorter period and longer period moving average, looking for crosses, using them as levels of support and resistance, right? But once we add it into the Ichimoku cloud, it becomes part of this larger analysis. So let's take a look at the second part here. And this is the Kijun-san line. It's calculated very similarly, exactly the same as the Tenkan-san line, except it's looking at a longer chunk of price action, a bigger period of time. Because instead of going over 9 periods worth of price action, it's looking 26 periods back. So it's a lot similar to a 30-day moving average because it's looking at about the same amount of time. But what we have is our second level of support or resistance on the Ichimoku cloud being projected out by this line. And like I said, basically the first two components of the cloud, the Tenkan-san and Kijun-san line, are really just two different moving averages. One short-term moving average, one longer-term moving average, or you might even consider that to be a medium-term moving average. So I can use those things just like I would use a simple or an exponential moving average, looking for crossovers, using it as levels of support and resistance. If I wanted to give a trade a little bit more room to breathe, I can use this 26-period moving average or the Kijun-san line as a level of support to trail a stop on. How would that trade would have been worked out differently if I would have done that on this break right here? Well, I would have gotten long right here, and rather than getting stopped out at this level on the 9-period moving average or the Tenkan-san line, trailing a stop at the Kijun-san line here would have kept me in the trade all the way up to here, so a whole lot more. I would have risked more, but it would have kept me in the trade a lot longer. So that's another way that I can use the 26-period moving average is as a level to trail stops at. We say that that is a little bit more aggressive, a little bit more risky level to use, not for a trader who's quite as conservative. Now, we're going to keep talking about the different components here, but think about so far how we already are able to use these two things, these two components of the cloud, to check against each other. We can see where they're crossing, we can see where one is above the other, we can see how price action tends to behave around these two, and already we have a more complex analysis than just looking at candlesticks alone, right? We're able to see a lot more about the strength of trend than if we just had a candlestick chart. Next, we have what makes the cloud really unique here, and this is the future or forward-looking trend lines that are projected and calculated on the Ichimoku cloud. And the first one is the Senkou Span A line. And the Senkou Span A line is very important because it creates one of the boundaries or bounds of the shaded area that you see here. Now, the shaded area that you see, the orange area, that is the component that's actually, called the cloud. That's the shaded area that we're really kind of looking at and giving the most consideration out of anything here, is what is created by the Senkou Span A line, and what we'll discuss in the next slide is the Senkou Span B line. But the Senkou Span A line is a future short-term trend line, and it's calculated in a different method than most other indicators are because it's actually plotted into the future. And it's a moving average of the Tenkan-san and Kijun-san line plotted 26 bars into the future. So what that means is that when we look at today's price action and today's level that the Senkou Span A is sitting at, it was actually calculated and plotted there 26 days ago, and that the levels that we calculate at the end of today are going to be plotted 26 days into the future. So what it does is it creates this shaded area that we can kind of use to confirm trend. And think about this logically. If we have an upward sloping cloud and into the future this shaded area continues to slope higher, it's a much stronger setup. It's a much stronger bull trend. And we have no reason to think that the trend might reverse anytime soon. Okay, so this is a component of the cloud that is a lot different than most other technical indicators because it is forward-looking. And I don't really know of any other indicators out there that really project specific levels and trends out into the future like that with the Ichimoku cloud. So the next bound of the Ichimoku cloud is actually the longest looking average that we have. And the Senkou Span B line, if you line this up with a 50% fib retracement, it'll oftentimes line up pretty well. But it's the highest high and lowest low divided by 2 over the past 52 bars, plotted 26 bars into the future. All right, so what this does is it takes a look at a much larger chunk of price action, twice as long as the Kijun-san line does, but again plots it into the future. So once we have the short-term trend and long-term trend accounted for using all of these different levels, we get a much more comprehensive view of what overall trend is like in the security. Now, this is kind of a generalization, but definitely a good way to think about the Ichimoku cloud. In general, if Senkou Span A is above Senkou Span B, we're in confirmed bull territory. If it's the other way around, that means the cloud is downward sloping, and it's not really a confirmed bull 6 out of 6 all-in type of setup. All right, does that make sense to everybody? Does everyone follow along so far? I know that's a lot of information to kind of have thrown at you all at once there, but it might make a little bit more sense once we put it into context of an actual trade setup. Who is speaking? My name is James Ramelli, moderator of the Alpha Shark Trading Room and educator here at Alpha Shark Trading. I guess I didn't put my bio slide in the beginning, but I've been giving these members only webinars for a long time. Kind of figured that most people knew who I was, but I apologize. I should do that in the future. I know that a lot of you did join us last week. Yeah. Vince says, isn't there a trailing line also? Yes. Yes, and that is one of the next components of the Ichimoku cloud. So now that we know what the moving averages are telling us, we can see how they line up, and we can see how we can use them together to make confirmations and validate the trend that we have in any given security. But the whole point of calculating the Senkou Span A and Senkou Span B is to get this area that we have here, the shaded area called the Kumo. Excuse me. Give me 1 second, guys. Oh, I apologize. It has been absolutely freezing here in Chicago over the past couple of days here, and I think I caught a little bit of a cold, so I apologize. But what we get once we calculate the Senkou Span A and Senkou Span B lines is this shaded area in between them, known as the Kumo. And Kumo is actually Japanese or translates to cloud. So this is the actual cloud. And this is one of the most important components of the Ichimoku cloud because that one glance equilibrium chart, that one glance indicator of what trend is right now is determined by where the cloud is relative to price. So anything that's trading above the cloud is confirmed is in bullish territory, and anything below it is in bearish territory. If you take nothing else away from this presentation except for that, that should be the one thing that you take away from it. It really is that simple. The simplest, most kind of first level of analysis that can be done with the Ichimoku cloud is just that. Where is the stock trading relative to the shaded area that we see here, or the Kumo? And if it's trading above the Kumo, then we know right away that it's in bullish territory. Then we can go back and look at all of these other components and make confirmations or invalidate that idea that we're trading in bullish territory. So let's try to do it right now with Google. Well, we're above the Ichimoku cloud, right? We're above the shaded area here. Now, that's one check for the bullish column. However, we're below the 9 and 26 period moving averages. One check for maybe neutral. The 9-period moving average is, however, above the 26-period moving average, and the cloud is still sloping to the upside, right? So just by going through all of those components individually, I'm kind of able to make a list and an analysis of how bullish this actually is. And I can do the same thing for a stock that's below the cloud. And if each of those components confirm one another, then I know it's an even stronger setup. So the cloud lets you be as aggressive or as conservative as you want. And one of the best applications for it actually isn't even for trade entry. For me, I use it to look at overall trend when I see something in unusual option activity or for earnings. Someone said, what does it mean when the cloud is wider or when it's thinner? And that's actually a really good question. And we don't really talk about that too much because there's actually quite a bit of debate amongst Ichimoku cloud practitioners on whether or not the thickness of the cloud is actually something that's really significant. And all in all, I tend to be on the side that it's not something that's super important. I don't really necessarily want to look, track the width of the cloud every single minute and see how it changes. I don't think that gives me too much information. But what I do think is important and significant for determining whether or not the width of the cloud is important is that, hey, if we're above the cloud here and we have a relatively thick shaded area here, well, then it would stand to reason that this section of trend is going to be much more difficult to break. If I have to trade all the way down here to get back into bearish territory, well, then the cloud was a little bit stronger than it is, right here, for example. So I tend to look at the width of the cloud and say, all right, well, if we're above a cloud that is upward sloping and rather thick, well, then that's a much stronger setup than if we're above a cloud that is sideways or rather, kind of thin, because that can tell me that we can be chopping around, but up and down through the cloud very easily. Does that make sense, Vince? Do I take trades that land in the cloud? So generally speaking, Dave, when something is inside of the cloud, it's in neutral territory. So it's really difficult to take some kind of directional play on a stock that is trading inside of the cloud because I won't really have much expectation for it to have a big move one way or the other. It's in neutral territory. One thing that I can do, and something that we'll actually talk about a little bit later on, is use that as an opportunity to set up some type of short premium strategy or strategy that would profit if we stayed inside of a range or had a declining implied volatility environment where we're going to have a stock that's just chopping around in neutral territory. But we'll talk about that in a little bit here. So the last component of the Ichimoku cloud is the Chinku span line, and it's the backward-looking component of the cloud. And this is what we're talking about when we say we look at past as well. This is the current bar's price plotted 26 periods back. And again, this is another component that kind of is the topic of a lot of debate amongst Ichimoku cloud practitioners. How important is this component? What do I do with it in my analysis? Is it a make or break type of indication of what trend is actually looking like right now? And I personally don't think that it is very much significant at all when we're looking at something. One thing that I can do with this indicator is use it as that final check mark for a setup that I'm on the fence about. And basically what I want to see to confirm trend is, okay, if we're above the cloud now and I'm looking at possibly getting long this thing that I have on the cloud right now, is the 26 period lagging indicator above the price 26 periods ago? Because if it's not, then I know that maybe we actually aren't in as strong of an uptrend as the cloud other components might indicate, right? In this case, it wasn't. We are actually a little bit lower than what we were trading 26 periods ago. So what that tells me is that, hey, this is not an uptrend that's really been intact for more than at least 26 days, because the price now is cheaper than it was 26 days ago. Now, if I was looking at something that was in a downward slope below the cloud, I would want to see price below the cloud or below its level 26 periods ago, as shown by the Chinku span line, right? But it's not really a calculated level, right? It's something that I can just kind of look at, right? If I'm looking at price now and I want to go back and say, well, where are we relative to where we were a month ago? Well, I can just look at the chart, right? But it is kind of helpful to have it plotted right there, but it's not something that I pay a whole lot of attention to. Someone said, I would think that the slopes of the upper and lower levels of the cloud might allow you to determine the strength of the trend over the last 26 to 52 days. Yeah, exactly. And that's what I'm talking about, Brian, is that the slope of the cloud helps me confirm what I'm seeing on the cloud. If we're above the cloud, we're in bullish territory. No doubts about it. If we're above the cloud, but the actual slope of the cloud is sideways to flat, well, then it's not as strong of a trend. If it's downward sloping, it's not as strong of a trend, right? So the best setup, the strongest thing that you can see if you're looking at a bullish setup is stock above the cloud, above the 9-period moving average, which is above the 26-period moving average, where the cloud is sloping higher and the 26-period lagging indicator is above price 26 periods ago. That is 6 for 6, bullish, right? If I wanted to look at the, all-in super bearish setup, I would want all of those indicators to line up to the downside as well, right? So I can, it's not going to be every single stock at any given time that has all of those things that are, lining up in all 6 components in the same direction, but those are the strongest setups. So why do we actually want to use the cloud? Because it gives me a view on the past, present, and future levels of a stock, future, or currency pair, and it can be applied to anything out there that trades. Okay, so the cloud takes into account more data than simple or exponential moving averages do because it's looking at, it's calculating 6 different components, and it's having them all plotted on the same study for you to see right now. Yeah, Google did proceed to sell off right there. I mean, it wasn't really the strongest chart. This was not a 6 for 6 bullish indicator. Like I just said, the lagging indicator was below price back here, or below both of these moving averages. The cloud starts to flatten out here, and we were actually trading right on top of the cloud. So this would have been a level that an aggressive trader might have looked to get into a position on a pullback, but obviously when the market falls as much as it did last week, it takes out a lot of those levels. But the cloud takes into account way more data than simpler exponential moving averages do. Gives me clearer levels of support and resistance for setting profit targets and stops. Like I said, you can use those different indicators to trail stops. One of the other things that we like to do, and one of the trading plans we're actually going to look at in a few minutes here, is using the cloud to find breakouts and then using the cloud levels to set stops and profit targets. But it helps me do that because I can use it for any security out there, any product, any plan that I want to. Because the cloud is something that I can calculate and apply to any time frame chart, no matter what type of trader I am, day trader, swing trader, longer term investor, I can get information about the securities that I'm looking at using the Ichimoku cloud. But time frame is important. So don't think that you can use the Ichimoku cloud to, fix your, S&P day trading plan on the 1-minute bar. It doesn't work that way. It is an indicator that works best in trending markets. So when you're trying to figure out what time frame it works best on for the security that you're looking to apply it to, you have to figure out and kind of ask yourself, where does trend actually start to develop in some kind of meaningful way with the security? Does it happen on the 5-minute bar? Does it happen on the 15-minute bar? Do it the 4-hour bar, the daily bar, the weekly bar? Some things develop trend over longer periods of time. Stocks, the best signals will come from the daily bar first swing trading. Now, that is a very general statement about stocks. Some stocks trade much quicker. Stocks like Apple, Twitter, Facebook, Tesla, Google, Netflix, those are names that I can trade on faster time frames than the daily bar. And why is that, guys? What do those names all have in common? It's a lot of tech names that I just listed out there, but tech is not the common thread between all of them. What did all those names have in common? Yeah, liquidity is one, but liquidity is not quite the word that I'm looking for. Yes, Steve, exactly right. They're all momentum names. Norman said it exactly right, too. They're all momentum names. They tend to move a lot. They tend to trend well during the day. Currency futures, they trade better on a longer time frame like the 4-hour bar. Anything faster than that will produce too many traps. They don't have that trend tend to develop over the 1-minute, 5-minute type of periods of time. Now, a lot of traders out there try and trade on time frames that fast. With currency pairs, I, for one, think that it is very difficult to do. and that trend develops much better on a 4-hour bar. When we look at testing strategies using the Ichimoku cloud, we always use the 4-hour bar for currency pairs. Crude oil futures trade very quickly, and they can be used with the chart as fast as the 5-minute bar. And Treasury futures as well can trend well intraday using a longer time frame, like the 12 or 15-minute bar. Day trading them can be successful. But we want to talk about trading weekly options using the Ichimoku cloud. So we're going to go over a very, very simple plan for day trading weekly options using the Ichimoku cloud. So here we have Tesla on the 5-minute bar from Monday, okay? So we always say that the best signals for this particular setup come when they fire in the first 3 bars of the day, all right? Now this is the 5-minute bar, and like I said, this is something that for a lot of stocks is too fast, but for a stock like Tesla, and if you guys want to write these down, I think I have them in a list at the end of the presentation, but the stocks that we run this particular plan on is, and there's a lot more that fall into this category as well, but the ones that we specifically look at and the ones that Andrew trades on a regular basis using this plan, Tesla, Apple, Facebook, Google, Baba, GoPro, right, and Twitter. All of those names, high momentum names. I know a lot of traders in the room that apply the same type of plan to Netflix, Gilead, and other momentum names as well. So just keep that in mind. It can't be a stock like GE or something else that trades very slow. It's got to be something that tends to trend well and trades well from open to close. That's actually something that you can do yourself. You can look at stocks and see, hey, how many times would the cloud have worked in this? If it's often, then it might be something you want to consider using the cloud for. But take a look at what happened here. And what we're looking at is a very simple setup. And I'm going to change the color of the pen here so you can see it a little bit better. What we have here is in the third 5-minute bar of the day, we break the cloud to the downside and close below the cloud. Now, at the time of this trade, the future cloud was downward sloping. We closed below both the 9 and 26 period moving averages, and the broader market was down. So this sets up as a short signal. Now, there's a couple of things that I can do when I see this stock break the cloud to the downside like that. Using the cloud to trade the breakout, I can either short stock or buy weekly puts in this particular example. Now, if I see a stock breaking the cloud to the upside, I can either buy stock or buy weekly calls. But on Monday, Tesla broke the cloud to the downside on the third 5-minute bar of the day. So if I were to trade the stock, and we're actually going to go over a plan for stock and options here. If I were to trade the stock, this is a really simple plan. I would take the signal in Tesla, short the stock when it breaks the cloud to the downside, and then put a stop above the cloud. So that bar closed at 211.45. I would get short at 211.45 with a stop above the cloud at 213.45. Now that was exactly I think like 2 ticks above the cloud right here. So exactly where we broke the cloud to the downside. My stop is above the cloud. So this is a level right here where I would leave my stop. My entry price is right here. Now, once I have that entry price figured out and that stop loss calculated, I then need to put my profit targets out. Sorry about this. I set my profit targets based on the difference between my entry price and my stop. So how much am I risking in this particular trade, guys? If I'm getting short at 211.45 with a stop at 213.45, what is my risk per share? Someone tell me. Yeah, $2 per share. Now, to make sure that I'm getting a good level of reward to risk, I want to make sure that I'm putting out profit targets that give me enough reward compensation for the risk that I'm taking on. Now, I'm taking on $2 in risk per share. So that means that my profit targets are going to be set based on that amount of risk. So my first profit target is going to be 50% of that amount of risk, so $1 lower. Then 100% of that amount, $2 lower, 150%, $3 lower, and 200%, $4 lower. So what does that average out to? That averages out to a profit factor of about 1.25. So I'm getting about $1.25 to $1 worth of risk. That is a pretty good reward to risk ratio. So after I know what those levels are. I put all of the profit targets in with the stop loss as a bracketed order where I see pieces of my stop loss get canceled as my profit targets are hit. Now, the first profit target was hit in the very next bar of the day, 5 minutes later after this trade signal actually fired. The second one was hit 10 minutes after that. The next, the next two were hit 10 minutes after that. And by 9 o'clock, 9:10 in the morning, 40 minutes after the open of the market, all four of these profit targets were hit by the end of the day. Now, one of the things that we talk about in the workshop for trading the Ichimoku Cloud with weekly options is trailing stops in situations like this where I think that we might have more downside. A lot of times we also talk about moving a stop from up here to break even after profit target 2 is hit for more conservative traders. So there's a lot of different ways that you can tweak this setup to kind of make it fit more with your risk tolerances. In this particular case, the stock actually sold off to as cheap as 203, which was way below the even fourth profit target projected by using that reward to risk measure that we did there. But does everyone understand now why we use the distance between entry and stop to calculate profit targets? It helps me ensure that I'm getting good reward for the potential risks that I have on. That was one of the things that people kept asking about last week was, hey, Andrew, how are you figuring out your stops here? And once you have that stop figured out, how are you figuring out where you're taking profits? And this is exactly how it works. It's super simple. Stop above the cloud. If we're breaking the cloud to the upside, the stop's below the cloud. And then profit targets are figured out at 50%, 100%, 150%, and 200% of the total amount of risk being taken on in the trade. Okay? So that is kind of the simple way to go about it because it is just a stock trade. Not that day trading stock is something that's easy, but it is not something that is as complicated as using weekly options. But we've tried to simplify that a little bit by creating a really easy to follow plan. Do you ever lower your stop? Yeah, Bill, like I said there, after profit target number 2 is hit, some more conservative traders may choose to lower that stop to break even because then what you're doing is you're locking in profit at a level that if you're stopped out at, you already put 2 profit targets in the bank. So it's not something that I always do, but it's something that can be done. And even after that, I know some traders in the trading room that trade this plan will, after they then hit that third profit target, will keep moving their stop down as they continue to move another 50% chunk lower until they're either out at the end of the day or have been stopped out. Another way that you can go about doing that. So when a stock breaks the cloud to the downside, like we have in the Tesla example, I can also trade a weekly option. Now, pretty much always, I prefer to trade the weekly options. To get short in this case, I would buy weekly puts. So we always have questions on how you should actually pick strikes when trading weekly options. Now, for figuring out on a Monday where you think the stock might go, we only have options that go out till Friday's expiration. In Tesla, on Monday, the weekly at-the-money straddle was trading around $11. So I would use this implied move to choose a strike to buy. So remember, the stock was around $2 or $2.11. No, at the money equals at the money. So when I'm talking about the at the money straddle in Tesla, with Tesla at 211.45, I'm talking about the 210 straddle, the closest to the money straddle. Or if there is even, whatever the closest strike straddle is. If the stock was at 210, I would use the 210 straddle. All I'm trying to use the straddle for is to calculate a level to then select the strike of the option that I'm actually going to trade. Okay, so here we have with Tesla, it was implying an $11 move for that week, the whole week, not that day, but that week. Now, I would buy the Tesla Jan 200 puts for $1.40 because that would put me at the level where they're implying the stock can go through this week. It's where I'm going to get the best value here and where I'm going to get the best percentage return when selecting an out-of-the-money option. Okay? Yeah, it implies the measured move, and I'm really just kind of looking at and keep in mind, on Monday, I'm not buying the Jan 200 puts thinking that the stock is going to go to 200. I'm buying those puts because that's where they're implying the stock can go by that end of that week. And if we start to sell off here, these things should see a nice return. Take a look at the way that the trade worked out. It might make a little bit more sense here. Yeah, it's something that can be used with monthly options as well, but I generally think that it's a better strategy for trading weekly options. When we look at monthly options, there's a lot more time premium involved in those options. And one thing that I always say is think about that logically. If you are trying to see what the market expectations are for where a stock is going to expire at the end of this week, is it going to be more accurate when they're looking at this week's expiration or when they're looking at something 30 days from now? Where do they have a better chance of being right, figuring out where a stock's going to be in 4 days or in 4 weeks? Logically, you would think that they have a better chance of having realistic expectations over the next 4 days, not 4 weeks. So it tends to work really well in weekly options is my point. Yeah. So those options were trading at $1.40, and I can set my stop losses based on my skill level, but in general, my profit targets can look like this. Because I can't use a level on the chart to determine a stop loss for the option, it's just not possible. I have no idea what the option is going to be trading at if we move up to that stop loss level on the chart at 213.45. So I just have to base my targets on a stop loss percentage and a profit target percentage. So in this particular example, when I buy options for $1.40, I will generally look to take profits about every 15 cents. That's what I'm looking for options that are between, $1 and $1.50. The more expensive the option, the wider my profit targets have to be. But whatever my targets are, I want to put them out right away after I get filled on the long position. And as the stock sold off here, all 4 targets were hit by the end of the day, and the options actually traded as high as 340 in that session, a full 50% higher than what that final target was. Now, the reason that the returns can be so exponential and happen so quickly with options like this, and in other stocks that trade at cheaper dollar amounts, you can oftentimes see options go from like 30 cents to $1.50 on a 2% move in the stock. It's because weekly options have such high gamma, and it can lead to exponential returns. When we have a high level of gamma with weekly options, we don't tend to see returns like this when we're right. It's not linear like stock. The returns are exponential, right? The gamma just ramps up these positions really, really quickly, and they can explode in value if you're right. However, that has 2 sides to it as well. If you're wrong, these things can lose value very, very quickly. So I want to take as many questions as I can from you guys. I want to take as many questions as I can from you guys. But I want to talk to you a little bit about what some people have had to say about trading with this trading plan. Jan said, thanks, Andrew, for the Ichimoku course. It's fab, and I love it. I can see the money floating into my account already. Paris said, the only thing I can say is try it out for yourself, and you will see the results speak for themselves. You do not have to take my word or anyone else's. You will see for yourself. And Mike said, I had the right ideas but was not executing properly. I was using technical analysis but not using the Ichimoku cloud. I know it now has greatly improved my trading, and I had the best month ever. So we have a workshop for trading the Ichimoku cloud, and something that goes over this strategy in much, much more detail, along with a couple of other strategies I think you guys might be interested in. And the course that we are offering you guys tonight is good for any trader, beginner, intermediate, or expert skill level who wants to learn more about trading, stop guessing for trades, and actually have a plan and systematic and methodical method for entering setups using the Ichimoku cloud. It's also good for someone who wants a new and more novel way to trade that most other traders have not heard of. Like I said, the Ichimoku cloud is popular, but there are still discount brokerage firms out there that don't even offer it to their traders in their platform. Things that we can guarantee about this course: we will only sell 17 spots tonight at this price. It will help you provide trade setups on the 5-minute bar using the Ichimoku cloud. It is a fantastic workshop for trading Facebook, Apple, Baba, Tesla, GoPro, and other momentum names, and it is our best-selling course. Now, I see a lot of questions coming in here, and I want to answer as many of them as I can, but just bear with me for one more second. So tonight we want to offer you guys our How to Trade Weekly Options Using the Ichimoku Cloud workshop, 80% off of our regular price, and we're also offering a bonus mentoring session that we're including free with the purchase of this workshop. And what we're going to talk about in the workshop is how to use weekly options as a day trading vehicle. So basically an in-depth explanation of the plan that you guys just saw with a ton of examples on how to use this how to use this plan to set up trades with weekly options like that, how to use the chart to buy, call, and put spreads if you're more of a swing trader and want to use a week-long setup for weekly options and spreads. We're going to teach you how to use the Ichimoku Cloud to do that, how to use the chart to sell iron condors, butterflies, and credit spreads. So if you're someone who's looking to trade credit spreads, we're going to show you how to identify the best stocks on the using the Ichimoku Cloud that are trapped in neutral territory and have less likelihood of a breakout, where there might be a good setup for a credit spread like an iron butterfly or iron condor. We're going to show you how to day trade Apple, Baba, Facebook, GoPro, Tesla, Twitter, and all other momentum names using the Ichimoku Cloud and weekly options trading plan. And it also comes with 4 hours of Andrew trading his own account live using all of these plans, so you can see how we apply them in real time. And we also are including a bonus 30-minute private mentoring session with Andrew Keene that you're able to come to live and ask questions about the workshop, about anything else. So you can take the workshop. It's about 8 hours in total of content that you get for $99. If you go to our website right now, it would be $499. But with that purchase on the website, you would not even receive this 30-minute private mentoring session. So it's a great deal. You can take the workshop, go through all of the content that is in the workshop, then you're invited to the mentoring session where you can answer all of the questions that or get answers to all of the questions that you have about the workshop or anything else. So the link here is alphashark.com/weeklycloud. Someone said, I like the Iron Condor, but not comfortable with spreads. Plus, platform using does not have a good setup for spreads. So I'm not sure what platform you might be referring to. Most platforms have pretty simple ways to set up spreads, but spreads is only one component of this workshop. You know, if you're more comfortable trading outright options, one of the main focuses is the day trading plan that we just went over. Thank you, Brian. You have a good night yourself. Are there any scans that can be run on to find Ichimoku Cloud prospects? As of right now in Thinkorswim, there is not. That would be way too many things that were showing up. I do believe that some platforms allow you to do a scan for the Ichimoku Cloud, but I'm not 100% sure about that. So any other questions, guys? Any other questions? The offer here is alphashark.com/weeklycloud. Just like with all of our other workshops, if you do not like this workshop and you did not get $99 worth of value out of it, you come to the mentoring session, you still think it wasn't worth it, we will give you your money back, no questions asked. All of our workshops have a money back guarantee and satisfaction guarantee. So check it out. You purchase now and you have access to it forever. You will never lose access to it. You don't have to watch it all the way through. You can watch it as many times as you want, review it as many times as you want, and you will be able to have it at your fingertips forever. Do you buy at the money options? Not necessarily. So basically what we talk about in the workshop is figuring out strike selection using that method that I just explained. Now that changes when you're later in the week. On a Thursday or Friday, that at the money strike selection method, using the at the money straddle to figure it out, is not quite as valid because there isn't much time left. And in that case, at the money options generally are the best way to go because they have the highest gamma peaks at the money and closest to expiration. So on a Thursday or Friday, those are usually the ones that we would look at. But we go over that in the workshop here. And like I said, the day trading component here, if you're not someone who's comfortable with day trading, don't think that this workshop is something that's going to be completely over your head or not applicable to you, because a lot of what we talk about, actually the day trading is only one component of this workshop. We go over some income strategies and some spread trading strategies as well, using the Ichimoku Cloud to help select setups. And for those of you that are credit traders, this is a great way to kind of have a different method of selecting stocks that are technically setting up for a credit spread opportunity. When you say use the chart, I'm talking about the Ichimoku Cloud study that is standard in most platforms. We're talking about the cloud here. You said you came in late, but For the credit spreads, how do you find stable credit spread opportunities? So it's all based on looking for setups on the cloud. It's looking for stocks that have a certain pattern of behavior inside the Ichimoku cloud, and for ones where all of the indicators on the cloud are pointing towards neutral price action. Because basically what the cloud shows me is when a breakout might happen. And all of the directional types of trading strategies that are based on the Ichimoku cloud are basically breakout strategies. But when we're looking at something for credit spreads, what is it that we don't want? We don't want something that's going to break out, right, Michael? So if I can use the cloud to identify potential breakouts, I can also use it to identify stocks that don't likely have an opportunity for a breakout. And that's the case when I'm going to look for, yes, those are the ones that I'm going to look for to set up credit spreads. And what we talk about in the workshop is how to figure out when the options market then confirms that idea. So you don't just want to look at something and say, hey, we're inside the cloud here, this is neutral, time to sell a credit spread, because implied volatility doesn't always agree with that idea. And we're going to show you how to make that confirmation as well in this workshop. It's very comprehensive. Like, you might think that, each of these different points is just something that we touch on, but no, it's an A to Z explanation of each of these different components of trading in the cloud using weekly options. It's basically almost like 3 trading plans into one. So any other questions, guys? Any other questions? A recording of this session will be sent out to everyone that registered for it. So you'll all get a recording. You'll all get a recording. Any other questions, guys? Any other questions? Like I said, we have a money back guarantee with this workshop. So if you don't like it, you don't think you got $99 worth of value out of it, that's fine. And we will give you back your $99, no questions asked. We do historically, though, give very, 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 very few refunds because this is a course that people really, really like. You mentioned that some of the time periods are too short, it will create traps. What is a trap? Oh, that's a fantastic question. So a trap is just another word for a false breakout, Roger. So like I said, with the Ichimoku Cloud, I'm looking for breakout plays. Where is something going to break out and run in one price direction, higher or lower, right? A trap is something that signals for that breakout, but then reverses and goes back the other way. When we're looking at a really short time frame where every single candle is only representing, a minute worth of price action, 5 minutes worth of price action, the range can be wide on a relative basis, and it can create for a very choppy Ichimoku cloud through price action. And that means that breaks oftentimes will set up as a trap and will not be an actual actionable setup. It's going to run back and squeeze the trader out. There's a better chance for choppiness. How does that make sense? The workshop is not a live workshop. The workshop itself, you get on demand. You go through the workshop at your own pace. As soon as you make your purchase, all of the materials and access credentials for all of the workshop materials are sent right to you into your email box instantly. The mentoring session, that is a little bit later. That I believe, and you get invited to this, I believe the mentoring session is on the 3rd, February 3rd, and it is. The mentoring session is on February 3rd. And if you can't make it to that mentoring session, that is a session that'll be recorded as well. So if you can't make it to that, you still will get the recording of it. It'll be on February 3rd during market hours. Do you offer weekly trades? This workshop is all about trading weekly options. It really is the only workshop that we have that is 100% dedicated to trading weekly options. This whole workshop is about trading weekly options. So any other questions, guys? Any other questions? How long is the workshop? I want to say it's about 2.5 or 3 hours. I don't know exactly how long. The workshop, this is recorded, yes. The workshop, though, the entirety of all the material that comes with it, because you get the recordings of these follow-up sessions as well, where Andrew trades the setups live, is about 8 hours long. Yeah. Maybe 7 hours. Yes, this is recorded. This is recorded. Sure thing, Vince. So any other questions, guys? Any other questions? Put the link in here again for you guys. Any other questions at all? I'm all thrown off. I feel like it's Sunday. It's not, though. It's Monday. I keep wanting to say, what about those football games today? Can you call in the morning to see if I bought this before? Yeah, you absolutely can. If you want to, here, I'll put my email address in here. If you want to send me an email too after you call, just make sure that you tell them, because I don't know that you'll, if you call tomorrow and there isn't any spots left, we've already sold out, because as soon as we sell out the number of spots that we set aside for this, the link will die. So if that is the case, GS, shoot me an email, james@alphashark.com, alphashark.com, and I'll make sure that they have one set aside for you. I believe this one is Bill. I believe this one is hosted by Andrew. Yeah, this workshop is conducted by Andrew. If you buy now, will you get a trade? Do you mean if you buy now and you already bought this one, will we let you exchange it for something? Yeah. I mean, if you want to do that, but like I said, you don't need to do that. You don't need to do that, GS. You can just call in the morning. Like I said, I know that you are unsure about it. If it's sold out tomorrow, I'll make them open up a slot for you. Yeah, you'll get this recording sent to you as well. Yeah, everyone that was here tonight and everyone that wasn't here that was registered will get this session sent to them. Do I always start the trade on Monday? No, not necessarily. I mean, it can come across any day. It just so happened that this week there was a really good setup on Monday that I wanted to show you guys. Thank you, Bill. So any other questions, guys? Any other questions at all? Questions, comments, concerns? In a minute or two here, I'll stop the recording so we have a nice short recording that we can send out to you guys. This is one of our best-selling workshops. If you guys are in the trading room and you hear people talk about day trading weekly options, it's likely that a lot of them took this workshop. So any other questions, guys? Any other questions? Put the link in here again. I believe that you're able to check out the trading room. That's actually a great point. So everyone stick around for like another minute because I have something else to share with you guys after we stop the recording here. But like I said, we go over all these different things in the workshop. This can be used to trade the SPY. Yes, absolutely can be used to trade the SPY. That same plan that I just went over, you can apply to the SPY, the Qs, the IWM, whatever ETF, the USO, anything. Any other questions you guys have, just leave into the chat box here. But I'm going to go ahead and stop the recording here. So thank you all very much for coming out this evening. I hope you guys got something out of the presentation and learned something new. Everyone have a fantastic rest of your evening, and I will see you all tomorrow bright and early. Happy trading, everybody.